traders and investors, they've stopped crying and they've started buying. The naysayers
Yeah, hi,
are
good
saying,
morning. Thank you very much for...
the naysayers are saying that, look, we missed the bus, it's time to jump back in. So even though earnings have been okay, macro concerns are there, valuation concerns, they never got over, yet markets are showing a lot of intrinsic strength. It's been a great comeback, but what explains this comeback, and is the comeback here to stay?
Yeah, well, hi, good morning. Yes, indeed, the markets have staged a very decent comeback, as you rightly mentioned, especially over the last 3 to 4 months. And this has actually nearly wiped out all the underperformance that India was showing relative to the other Asian peers. And now with the outperformance that we've seen in the last 3 to 4 months, now India is now slightly outperforming the regional index, which is quite encouraging. Now, what has driven this? I would say a couple of things. One is obviously the trade-related tensions globally. And what's been happening in terms of the exchange of sort of war of words and also some actions as well between the US and the China. So clearly there has been some shift of the global investors away from China and China-centric markets, and India obviously is seen as a very good option. Also, there have been certain troubles in the other Latin American markets and markets like Turkey, etc. as well. So, in that context, India sort of appears as a relatively safe haven. So that is, one thing that has helped. The second thing, is slightly more technical, that many of the large cap technology giants in China or the fintech giants with a very, very large index weight, they have corrected quite a lot, and the same is the case with Korea, etc. as well. Because of some softening in the tech-related sentiments globally. Now, that was the big reason why India had underperformed last year in 2017, and with those big sort of tech names in the Asian tech names going down, has meant that the relative advantage lies with India. So. So in that sense, we have clearly benefited. Obviously, the domestic flows in India continue to be very strong, although they have come off somewhat from the strong base of around 18 to 20,000 crore kind of a month that we used to see towards the end of 2017. Now we're looking at about 9-10,000 crore. But it's still a very respectable number in terms of the inflows into the domestic equity mutual funds. And also keep in mind that in the last 3 to 4 months, except for a couple of issuances that happened recently, there has been hardly any corporate activity. So all the money that is coming into the domestic equity mutual funds is straight away going and getting deployed into the secondary market, supporting the valuations. So yes, I would say the confluence of these factors, but yes, I must say that the Indian markets have stomached quite well a lot of macro negatives, like the change in the tones and the actions of the RBI, inflation outlook, becoming slightly worse. The tax collections, the GST collections continue to remain weak and continue to create fiscal worries. So all these worries have been stomached quite well by the Indian markets because of the factors that we just discussed.
Yeah, rightly said, Mahesh. Morning, firstly. And that's an interesting point that you're making, that India is outperforming on a relative basis. We're a safer haven, better of the worst lot, as opposed to other emerging markets, or for that matter, even China, what with growing escalations of trade talks and trade wars, etc. What do you think could challenge the FII inflows into India, which have been a net positive in the month of August? What could challenge that? Do you think another blip down on current account deficit and there could be a reversal perhaps, or do you think up until when other emerging markets continue to fall and show weak performance, we would continue to be that safe haven that just about everyone would rush to?
Yes, so okay, so we have seen some inflows in the month of August, but remember that it's still a very small number. And on a full year basis in the current calendar year 2018, we are just about almost neutral kind of in terms of the flows, the inflows from the foreign investors. So foreign investors haven't really played a big role as such. But yes, there has been a change of sentiment that in the earlier months of the calendar year we were seeing some outflows, and now we are seeing those outflows have come down and small inflows. Now, what could negatively impact the foreign investor sentiment from here on? So clearly, the expectation is that the bottom up is improving, and the corporate results, for the month of June, although we did see earnings revisions on the downside, especially for the large caps, but many of the mid caps and the domestic oriented names did not do that, badly, and the pace of earnings downgrade has definitely come down. And now the expectation is that the September quarter and the December quarter, would be good, especially the December, onwards, because by that time, hopefully the base effect, etc., would all be over, and we will really see the like-to-like numbers, and by that time we would have also seen the effect of the festive demand, etc. So the expectation is clearly that on the earnings front, if that does not materialize, then obviously the foreign investor sentiment will likely get impacted, somewhat. Also, one has to keep in mind some of the macro factors as well. We know that in the second half of the current financial year, the government borrowing program, etc., is actually quite big for both the state and for the center, and the expectation is that the RBI will step in with the OMOs, which will help improve the liquidity and keep the yields from rising from here on. But if there is some mismatch on that front, even that can actually put some pressure on the FI flow on the debt side, and which in turn has the possibility of impacting the currency outlook as well. So those are some of the domestic factors. Obviously, much more depends on what's happening internationally and what happens in the US midterm elections, which are expected in the month of November. Now the current expectation also is that the current trade related tensions might subside beyond the month of November, and if that were to actually happen, it should be a good news for the general risk appetite of the global investors. But if those trade tensions were to further accelerate beyond November, and remember we also have our own state elections coming up for the 4 states in the month of December, and any possible adverse outcome from those state elections would be the things to watch out for in terms of the foreign investor sentiments.